Wouter Volckaert, Fund Manager of Henderson Global Trust. Now, there's been a lot of newspaper headlines recently with the strength of the US stock market and the US dollar, but you today wanted to talk about the European stocks.
That's right. A bit controversial, so maybe let's start with my view on the US, because I've been actually quite bullish on the US. Last year I've added an extra 10% of our assets, or invested an extra 10% of our assets in the US, making it by far the biggest regional position we have in the global trust. It's over half of the trust. And the things that attracted me to the US were, you had better economic momentum in the US last year compared to anywhere else in the world. And then there was the anticipation of dollar strength, because the US was going to be the first country to increase its interest rates. And then probably most important is there were a lot of good, attractive, solid companies that I could buy in the US. So I've been positive on the US and it's paid off. Probably a bit more than I hoped so, because the US dollar went up more than I anticipated.
So the appetite is increasing in Europe. Where's this coming from?
Well, let me start to say where it's not coming from, or at least why my appetite isn't increasing. It's not quantitative easing. Why I'm getting more positive is because the leading indicators for the economy, the things that predict where economic momentum is heading, they're picking up. It's things like credit growth, how much are banks lending to corporates. It's things like surveys on the sentiment of CEO, how bullish are you, or the output of factories, they're all trending upwards. So I think that predicts that we're going to get better economic momentum. At the same time, sentiment's pretty low. People don't have big expectations for Europe. So low expectations with higher leading indicators, that sets ourselves up for earnings surprises. And the fact that they're going to get a lot of companies are going to get a nice boost from a weaker euro, that helps, because they'll be able to export more or cheaper goods to other parts of the world. So adding everything together, I'm getting more positive on Europe.
So in terms of the portfolio, does that mean you're selling US and buying Europe with it?
It's not. I'm keeping my US stocks. I think we're in for a longer term cycle. I think the US dollar is going to be stronger for longer. It's not going to be a one-way trade. I'm sure we'll have corrections. I keep being positive on the US. If I add more money to Europe, it'll likely come from the UK. The UK, that's a whole different story. Then we talk about elections, etc. So maybe we'll keep that for another time.
Wow, so thanks for the update.
You're welcome.